Last week, Nvidia's earnings showed that the company's cautious outlook is intensifying concerns that the current pace of AI infrastructure investment may not be sustainable. However, Nvidia still sees a massive long-term opportunity, forecasting $3 to $4 trillion in AI infrastructure spend by the end of this decade, with a potential $50 billion China market if access normalizes. Now, the fiscal Q2 results were strong, 56% year-on-year revenue growth to 46.7 billion, but this represented the slowest growth rate in over 2 years. So there was some concerns, and there's tensions amid trade restrictions, which have paused expected H20 chip sales to China, clouding future revenue visibility. So there's a number of mixed factors really going on here with Nvidia. Now, seasonally, there's two periods that really stand out. This weak period, June and July, and this weak period that we're coming into in September. So if you look from 1st of September through to early October, you can see that there's only a 52% winning trade percentage, an average return of 1.91%. And look at some of the maximum drawdowns here. They're pretty heavy. There's a number of drawdowns that go into double digits. So what's interesting to me is with Nvidia forecasting a massive long-term opportunity still remaining, if you look at the October and November period, it's pretty strong. So actually buying Nvidia shares on any dips, anticipating that October, November window, and if you look at that sort of just around the turn of the month, very strong winning trade percentage, almost 92% in the last sort of couple of weeks, last week of October, first week of November, with an average return of 7.87%. So if you look at kind of this area here, where is it? Sorry, if you look at this area here, what you can see is that if we get a drop down to this overall support area, it's a nice area for support. It's overhead resistance, near-term support, and it's about 11.38% down from price. So that would represent a potential drawdown area where we could potentially see buyers, and price could be stops could be placed just nicely the other side of this structure. And if you look at the average true range, it's 11.73. So you could use double the average true range. So you have a stop of $22. So that would mean entering a long position at 155 and a $22 stop, which would leave your stop here around 133. Certainly worth considering, and definitely worth looking at Nvidia's share prices as we come into these interesting seasonal patterns.